Hi guys, welcome to a new edition of Proverbs of Prophet. Before I start anything, let me first greet my boy. Boyzin.
What up?
Grand
Hey
boy.
everyone. How you doing?
I'm fresh.
So today we're talking about the stock market as a whole. Man, what is the stock market? What it is, and the opportunities that are there. Because when the channel started, this was like the backbone and what we both equally believe in.
Yeah.
The stock market, how massive it is, how often we're going to speak about it. So, yeah, let me just make an example of what the stock market is and why it exists.
Sure.
The stock market exists because of businesses that are being traded, right? They sell these things called shares, and these shares get traded thousands and thousands and thousands of times. Why does a company even be? Why do we see companies in New Jersey? Why do we see companies in the London Stock Exchange? Why do we see companies in the New York Stock Exchange? These companies all are called public companies. So there's private companies and then there's public companies.
Yeah.
They go there because some want to grow rapidly. Some see opportunities in business and they want to grow rapidly. How to grow? They use going public as a method or mode of growth. So how do they grow from that? How do they grow from being public? Number one, being public, meaning it's your initial public offering. That means a private company goes and IPOs. The private company IPOs, meaning it goes public.
Yeah.
The IPO means initial public offering.
Sure.
Offers shares to the public can buy. Offers the public the opportunity to be shareholders.
Yeah.
Give an example of what that might seem like. Let's just say Unondumiso.
Sure.
There's some apple.
Selling
Selling apples, right? She doesn't have any better idea of selling apples. But nonetheless, she sells apples, man. Ain't no problem. Selling her apples, and she has but just 5 employees. Not because she only wants 5, but right now, she's a small business. She can only afford just 5 employees. These employees work night and day. They take into apples. But man, she's sitting in an office. She's going out there in the field, working with these people perhaps as well. But she goes like, look, man, I have these apple trees. I could actually plant more apple trees. I could hire more people to then take all these apples that are there because there's a whole lot of opportunities there. I have a lot of land. I can even franchise my apple company. I can even make apple juice. But right now, it's only just 5 people. Let me go to the bank. She goes to the bank. She's like, look, bank, this is who I am. This is how long I've been in business. This is how much I'm making. Please give me X amount of money to grow my company.
Sure.
The bank goes, she goes to family member, like, look, this is what I have. She goes to people. Everybody says no. If they say yes, it's not as much as she wants. But sometimes they just want way more equity than she's willing to give up. All these deals just don't seem good for her. She goes, you know what? I'm a big enough company to IPO.
Sure.
She goes on IPOs, offers shares. And this incredible guy called Upiwe Invest, right? She goes, look, man, I'm gonna sell shares. It's gonna be 1 rand per share. This is this idea I have. I'm like, all right, cool. This company, Nondu's Apples, cool. I'm looking into it because now it's now a public company. But I know her. I know what she can do. I know the companies she's probably previously been involved with. I see the vision. I see where she's going. I'm like, you know what, man? Look, let me invest in your company.
Yeah. Young one, I think it's ghost.
I see the fact that, man, she got a bright future ahead of her, right? So I invest in these shares, 1 rand each, and guess what? She actually grows. Takes my money, grows the business, employs more people, plants more apple trees, makes franchise. The 1 rand per share price now goes higher. Why is it going higher? The company's growing. More investors are coming in and buying these shares in order for them to sell higher, right? Everybody's buying. We know what happens? The share price goes up. As we buy, as more people buy, as more investors come in, the share price goes high. I invested my 1 rand because it's 1 rand per share, right? Next thing you know, in 5 years, it's 5 rand per share. I made 4 rand per share because I bought it 1 rand. And someone else comes late, they buy the share at 5 rand, and then the share price continues to go high. I obviously made way more money because I came in early.
Yeah.
But if they buying the share price at 5 rand each and it still grows, they make some money, but I made more money because I came in early. And essentially, that's what we're trying to talk about. So as the share price grows, it's a lot of people buying at once. All of this is happening at a large scale, but simply what I'm speaking about when we speak about the stock market, it's companies that go public and everybody else buys and agrees at a price. It's constant buying and selling. Some people buy high and sell low. They buy the company at a high price and then sell it at a very low price because of some reason they think it's going to get worse or whatever, or lack of patience.
Yeah.
So this is what the stock market is in simple terms. And that's why many of us are listening. That's why many of us get involved. That's why many of us risk money because of them investing in these companies. And that's what it is, put simply.
Yeah, I like that example. I won't even lie to you,
Sure.
né? Because I feel like it's the simplest way to kind of put it out there, with what the stock market kind of entails, né? Essentially, if a company is going public, we know Wootsie that it actually wants to expand. The future, it has future aspirations to grow, to expand the business. Like you said, it's okay. Maybe I also want to add like juice in there. I need to buy blenders. I need capital. So essentially, like companies will go public so that they raise enough capital for expansion and growth, right? So yeah, essentially that example I feel like is perfect because in simple terms, that is what it is. And why I personally, like you said, this is literally the backbone of what we talk about. In Proverbs of Prophets, maybe at least in every episode you will hear us talk about the stock market on or how that particular topic ties into the stock market, because literally it is the backbone of what we're trying to put out there. Because to be honest, the stock market is the simplest way to make money. It is the simplest way to grow wealth. It's not the easiest, but it's the simplest way, right? Because like you'd hear abantu abaningi that actually that have money would say, you need to find a way to actually make your money work for you. What you might ask, okay, what does that necessarily mean then? If for me, I work, but I utilize my income to try and buy back my time and actually make money while I continue doing something else. So I take my money, invest it in a company, so I buy that company's shares. That company is sweating and it's giving me returns. I make money from the capital gains, right? So that's essentially why we like the stock market, because it's not as complicated as any other investment vehicle. It's literally the simplest investment vehicle. It's time tested, right? It's the simplest way to invest. That's why for me, I will always gravitate towards that. Like you said, Owuti, that's something that we literally speak about. That's our backbone, because it's the simplest way. Ne? Yeah, I feel like I honestly like that example because of the fact that it kind of puts out there, this is so simple. This is so simple. You get to take your money, invest it in a company, you continue whatever you're doing, and that money makes money for you.
And also just to add into it and just like expand more and go also like to more folders of this massive thing called the stock market. You know what else you can do is pay something out, something called dividends, right? So to make the stock more attractive, what companies sometimes do is say, look guys, if you buy our shares, we're gonna give you your money back in fractions. Maybe just say they give you your money back in 6 months, right? They give you your money back twice a year or whatever, off the prices off the shares you bought. So that's what companies sometimes can make to make the stock look attractive, because some people just want to keep getting something, right? So that's how it sometimes takes place. Some people who are investors will take those dividends and invest back into the company, right? To just keep on investing there. But also in the stock market, you find something called indexes. So when you look at something called indexes, this is just a massive what you call a basket, right? That is full of companies, right? So it's something called in the London Stock Exchange, something called the FTSE 100, FTSE 100, right? So that FTSE 100 has the top 100 performing companies in the UK. right? Top 100 companies in the UK. So what indexes do is give you a general view of how the market is performing. In America, in the New York Stock Exchange, they have something called the S&P 500. They have something called the Dow Jones, right? The Dow Jones has the top 30 companies. The S&P 500 has the top 500 performing companies. And so these companies are a general view of how the New York markets are performing that day, of how the markets are behaving in America that day. You ever watch the news and you saw them saying, this is how the markets are performing today? They usually show indexes. And so the thing about indexes is the fact that they have the best companies there, right? As they've collected, right? They have the best companies there. And of course, some companies leave, some companies are added. In the Dow Jones recently, Apple was added, right? I think it was AT&T that was taken out of there because companies are weighed differently there, right? So you can look literally into the top 30 companies, right? You can look into the Dow Jones. What companies make it up? You can look into the S&P 500. What are these 500 companies? What is their business models? That's what comes also into something we'll also speak about, which is like now studying it, right?
Yeah.
So these indexes have all these best performing companies that you could actually study and look into, like, oh, so these are the companies, so let me look at this, because it involves a whole lot of research. It involves a whole lot of even looking into their books, right? You can look at the books of Amazon. Financial statements are there. The balance sheets are there. You can look into what do they want also, like they want to now come to Africa to expand their markets. These are the things we look at in order to now be profitable in the money you invest, and the time in which we spend in these companies, and the money and the time we spend in the markets and looking at opportunities on whatever companies to buy.
Yeah.
Sure.
Doubling down on what you're saying, ne?
Sure.
And also coming back home, ne? Because sometimes a lot of people can't necessarily afford the S&P 500. A lot of people can't afford a one and Jungle Busho Fits 100.
Sure.
Even coming back home, there are indexes like ESA 40.
Sure.
So these are the top 40 companies in the JSE, the top 40 high performing stocks in the JSE.
Sure.
That for me, ne, that kind of holds two parts to it. It's a hack. It's a hack. You can see these are the top 40. So highly, if you went up as a profiter, you invest in these top 40 companies, you kind of guaranteed a win, right? You are guaranteed to win. It's a hack. It's literally a cheat code. Look at what SA 40 has. Look at what S&P 500 has. But for that information to be vital, you need to understand your investing plan, right? You need to, for a person like me, a company that is as young as Tesla, it's worth investing for me because of the fact that I understand the type of investor that I am. I'm doing this for the long term. I'm a long-term investor. I don't want to see my money anytime soon. In the next 5 years, I put money in the stock market and I forget. Because of the fact that I understand, this is not about 2 years, 6 months, 1 year. I'm looking at this thing at least 10 years, right? That is the information that you're saying. It's okay. There's things like the S&P 500. I look into that, but I still try to suit my investment palette, right? I'm kind of more open to investing in riskier stocks, and stocks that have a big room for improvement on growth, right? So I'll go for a Tesla. But if you're a person that likes to play it safe, you might literally need to stick to indices and what you call this, ETFs, which is like you said, Woodsy, this is a basket of companies, right? So even your exposure to a market, you are exposed to different companies, but even if one company is dropped drastically, if you're investing in Renogen and Renogen just you literally that ETF that has Renogen will get affected, like it will be a small change because it's a basket of companies. It's literally that on its own is a hack, but it's a hack only if you understand your investment plan. Only if you understand okay, how long am I investing? So that is vital information, because I feel like a lot of people kind of go into the stock market and randomly start picking stocks, right? It's understanding your investment palette. It's understanding okay, Mina, I'm looking at this thing for the next 10 years. So you have much more room to look at a Tesla. You have much more room to look at a Renergen. You have much more room to look at a transaction capital. And these are companies that are, this is not a financial advice, but these are companies that people should be doing their own research on. Research these companies. Like you said, Wuti, there's information out there. I think that's the one thing that's scary, is the fact that Wuti, we're complaining while there's literally information out there.
That's true, man. Like, look, man, you can not look at any of the companies you mentioned. In fact, like, look at the company that you might wanna like invest in, man. Do you like Apple? Do you like Apple? Like, it might be a better, business, or it might be a better deal to buy the Apple stock instead of the Apple phone. You know what I mean? Because of course the prices are drastically different, but also in the same breath, investing doesn't even have to be that hard. Now look at, you always use Google. Why not buy the Google stock? You always use the laptop that has Microsoft. Why not buy the Microsoft stock? These are decisions you make yourself. These are decisions you make on companies that you might be interested in. But of course, all of it needs thorough research. All of it needs looking into it and learning about what is technical analysis. What is fundamental analysis? Okay, so fundamental analysis has to do with the things that surround the company, right? The CEO, the news, the industry of like maybe let's say you buying your Microsoft. What are the news surrounding Microsoft, and the industry in which it is in? Those are the fundamentals and the thing that's around it. If you want to look at technical, go into it, right? You look into the graphs and everything, man. Does it seem like it's gonna go up? Let me look at the history. How has it been performing for the past 5 years? How does this graph look like, right? So looking into the books, right? So like this is a massive opportunity, and the reason why it continues to be our backbone and our spine is because it has been tried and true, but also there's a whole lot of information available there. There's a whole lot of information available. It's always, and should be, I think, always for the long term, because the winners are the ones who stay there. The winners are the ones who keep their money there. It's not the people who invest now and withdraw in 6 months. It's not the people who invest now and expect their money to be 100x. Maybe in crypto, not in stocks, right? So guys, it's literally a whole lot of research, and it's also not as hard as it might seem. It's not as hard as it might look like. Like there's money managers you might try to copy even. There's a company called BlackRock. It's the best. It's one of the best money managers in the world. There's a company called Vanguard. These are American companies. These are American companies, the best in the world. Just look at the top 10 companies that Vanguard holds. Look at the top 10 companies that BlackRock owns. Okay, cool. It seems like there's Microsoft in the top 10. There's also Microsoft in their top 10. Okay, cool. Let me look into Microsoft myself. You know what I'm saying? Okay, it seems as if like there's Tesla in both these companies' top 10 held companies. Okay, cool. Let me look into these top 10 companies that they have. This is literally information that is available, information that is feasible to just even read into, and literally download a broker, put your money there. It doesn't. And another thing about it is, you can buy fractional shares. One share price. If maybe let's say you buy an American company, it's expensive. The dollar is incredibly high. You can buy 0.5 of one share. You can buy 0.3 of just one share. There's possibilities. Come to South Africa. There's beautiful stock market in our country. Cheap companies worth like a 1 rand per share. This is information that is available. These are the opportunities that are there for me and you in the stock market. So there's a whole lot of opportunities. There's a whole lot of research that can be done. But man, we can and we will break free to financial freedom through this, the right way, and the way that is incredibly weird, but a way that we could use in order to escape the poverty we're in.
Yeah, like I just want to go back to the point of Olshilut. Okay, bro, I'm a Nike fan. Anyone that knows me knows Wuti. If it was up to me, bro, I would wear nothing else, right? But when you understand the difference between assets and liabilities, I do not want to lie to you. I will not own 500 pairs of shoes, now Nike shoes, until I own 500 stocks of Nike.
Sure.
Because I understand, there are a lot of people like myself. There are a lot of people that look at Nike and that fell in love with Nike from a long time ago, right? So I can use the fact this is something that I like and I know a lot of people like. I can buy a Nike stock. And by me investing in Nike, I get money back from the factory because then even if I'm buying Nike, where you spend your money, you're investing. Because if I buy shares of Nike, né, they taking that money and they expanding the company. If I buy a pair of Nike shoes, né, I'm buying this pair. They take the money and they expand. I get nothing from getting a pair of Nike shoes, but I profit from buying the share, right? It's you probably have an iPhone. Buy Apple stock. This is simple. This is not as complicated as we want to make it out to be, right? You have Nike shoes. Buy Nike. You, like you said, you already using a laptop. Microsoft obvious. You get what I'm saying? Like it's just understanding what's okay. First, maybe gravitate towards something that you know, which is something that you like, and you see it everywhere. Go, like, you probably every month you go to ShopRite, you go buy every month you go to ShopRite, buy ShopRite stock. It only makes sense, right? Because you know there are other people doing exactly what you're doing, but you can profit from actually owning a stock instead of going to utilize and being a consumer of like Nike, a consumer of Apple, a consumer of ShopRite, right? It's literally the blueprint to investing in the stock market. It's all over. Like you said, there's information. You can follow up with BlackRock, Vanguard. You can literally follow people that have been doing this for a minute.
Sure.
You can look at their portfolio, right?
Sure.
You can also gravitate to things that you like.
Exactly.
So it's literally a life hack, and why this is super important to us and it proves of profit is the fact Uguti. The saddest thing is the fact Uguti people are complaining about economics, but nothing is going to move until we start putting ourselves in a position we move from the consumer side into the investor side.
Sure.
All right, it's we're not consuming our way to equality, we're not consuming our way into financial freedom. It's understanding that you have to invest every month, have something going to Nike, have something going to ShopRite, right? It's literally looking into these companies and putting your money more into towards stock than you do maybe groceries.
So look, guys, there's a whole, like, the stock market is vast, it is massive. There's healthcare, there's technology, there's renewable energy. It's a whole lot. It's vast. And sit down, as irritating as it is, as confusing as it might seem, spend time with it, because in the end, when you look at the people that we're trying to look like, they've went this route. They were not buying themselves to freedom. They were not overspending seasonally. They were not hoarding things, but they were hoarding things to own. And these are the things we're talking about: the stocks, the shares. And that's the episode for this week. Thank you so much, guys. Sub, share, like, comment. Thank you so much. Take care.